I lost $40,000 in 6 months trading the stock market like my personal casino. And if you're watching this video, you're probably making the same exact mistakes I was. Look, I get it. You see some trader on Wall Street Bets posting 500% gains on Tesla calls and you think, I need to get on this action. So you throw your rent into some out of the money options, praying to whatever trading god exists, and you watch your account get absolutely obliterated. Here's the brutal truth, and I'm saying this as someone who literally turned trading into a gambling addiction. Most of you aren't traders. You're gamblers using indicators instead of poker chips. You're no different than that guy at the casino putting his life savings on a parlay because his boy knows a guy. I was there too. I was that guy putting my life savings on a parlay, revenge trading after losses, doubling down on terrible setups, and convincing myself that the next trade I would make it all back. I turned $30,000 into $1,000 because I couldn't tell the difference between trading and gambling. But here's what changed everything for me and what I'm going to show you in this video. I learned how to separate the gambling addiction from actual systematic trading. And once I did that, I went from losing money month over month to consistently profitable. So if you're tired of treating your account like a slot machine, if you're sick of the emotional roller coaster, and you want to know exactly how I broke the gambling cycle, this video is for you. This is how to stop gambling and start trading. Fixing your mindset. Do you identify with any of the following? Are you constantly blowing accounts every time you load a couple $1,000s into your account only to turn it to dust? So what do? You run back to your bank account, you link up your brokerage, and you deposit more and more money. What's the difference between that and the guy who lost all of his money at the casino going to the ATM and withdrawing more cash? Do you trade with your heart racing? Do you identify with the following? Blowing accounts. Do you constantly find yourself going to the ATM at the casino and withdrawing more money so you can keep playing at the tables? Do you constantly keep adding money into your accounts over and over and over again, waiting for it to turn green? Right? That's what you're waiting for. You just keep putting more and more money into it. It's no different than the person at the slot machine reaching into their pocket and putting the last change on one more spin. Are you trading with your heart racing? Do you feel your heartbeat when you're in a trade? Do you feel that while you're trading? Do you have sweaty palms? Do you feel nervous? Is your natural fear instinct kicking in when you're entering a trade? Maybe you just have too much size. I just need that big trade, then I will take trading seriously. I hear this all the time. Traders blow their accounts and they go, hey, if I just hit one more big trade, then I'm going to take this serious. I just need to make the money back. That is the wrong mindset. Is your day being absolutely ruined from your P&L? Right? Is your wife, is your kids, they notice that you're sad because it's another red day? Are you really beating yourself up? Your day should not be ruined from your P&L. That means you are trading emotionally. Do you size up after a losing trade? Oh, I got stopped out here, so therefore I'm going to triple the size of the next play to make sure I make it all back. Do you constantly think about the money, not the process that will make you the money? If you identify with any of these, then you need to fix your mindset. Okay, so here's how we're going to fix your mindset. First, we're going to understand the probability and risk behind trading. So we're going to cover probability and risk, and it's a different tweak than things you've heard before. We're also going to talk about building a sound trading plan, what that looks like, what I do, real trade examples of my trade plans, and how to actually execute them. And lastly, we're going to talk about following a strict system so we become from gamblers to systematic risk takers. But before I do that, make sure you like and subscribe and comment down below. What do you want to see next? Let me know. I got like 20 ideas in the chamber, but more ideas, the better. DGen plays will fail, but math is your holy grail. Oftentimes, traders come to me and they say, yo, Ellie, what is your holy grail? What made you profitable? What got you to where I want to be? Right? What got you there? And the thing is at the end of the day, it's just math. Okay? It's just math. There's no special indicator that'll get you there. There's no special time frame. None of that. It's just math. So we can see over here, we have Las Vegas, right? We have the bright lights, the scandalous women, the clubs, right? Everything you could possibly imagine. The gambling, the noises, the lights, action, camera, the fast life, okay? And on the right here, we have Wall Street. It's cold, it's rainy, and it's miserable. Where do you think finance is? Finance is not where the bright lights are. Remember, the reason they have these bright lights is so you can see on a map, so you go there and blow all your money. Meanwhile, this person here is actually making $1 million a year trading for a hedge fund as a quant. Same with this person. Notice, making money is not flashy, okay? It's very boring, sad, and depressing. Just kidding, it's actually really fun, but you get the idea. This is to attract you to spend your money. This is where money is actually made. When you're gambling, okay, so some of you probably have gambled before. I assume most of you are over the age of 21 and have gambled. When you place a bet on black with a double zero, you have a 47% chance of winning. Notice, it's not 50-50. You have a 40% chance of winning. Therefore, over time, you are going to lose money. But what happens if we just got rid of the double zero? If we got rid of the double zero and some other numbers, right, the 1, 2, and 3, our chance of winning increases to about 55%. This is where the edge lies. So now we know if we bet black over and over and over again, statistically speaking, we should make money. So what does that look like? If you put $100 bets, okay, with $10,000, after 100 spins of the wheel, you would, probability speaking, make $900. Now, since this is a game of chance, this is a game of probability, sometimes we're going to hit red 20 times in a row. It's just the nature of the business. However, you know, statistically speaking, the odds are in your favor. Let's remove even more numbers, okay? So we're going to remove even more numbers, and now we just have this middle row, and we're just going to keep betting black. We now have over a 61% chance of winning. Is it statistically likely that we're going to hit red more often than not? No. We are not going to hit red that much. However, we can easily roll or spin 30 reds in a row. It's just the nature of the business. But statistically speaking, based on the math and everything, all else held equal, there's a 61.5% chance of winning. Keep this in the back of your mind. So after 100 spins with $100 bets, you would make $2,300 in profit. But what's interesting is notice how much more profit you're making with just a slight increase in your win rate. Remember, we went from a 55% win rate to now a 62% win rate, and look how much more money we're making by just betting the same thing. So the question is how many times did you spin that wheel? I'll tell you, if the math is in my favor, I will spin that wheel and not sleep for days on end. I will keep spinning it and spinning it and spinning it and spinning it and spinning it. Why? Because the probability is in my favor. I know it's going to land on black more than 60% of the time. However, I also accept the risk that sometimes it's just going to hit red a bunch of times in a row. But I have to keep on spinning because the probability is in my favor. Now, we're not going to keep on spinning when the probability is not in our favor. At a 47% probability, statistically, over the long run, we're going to get bagged. Follow your plan. Don't be a degen again. Okay? What does this mean? This means follow your plan. Actually have a trading plan. A lot of times, traders will message me, yo, Ellie, I took this trade. And I reply back, well, what was your trade plan? Send it to me. No one's ever sent me a trading plan. Literally never. Okay? So stop being a degen. Back to our degen thoughts. Here we are at the roulette wheel. A degen will think, yo, bro, I'm just going to bet mom's birthday because mom's birthday always hits at the casino. Okay? You bet the month and the day. I learned this, funny enough, at a casino at 5 a.m. one time, and that's what the guy told me to do. But yeah, it's not really a betting strategy, okay? You're not going to bet your kid's birthday. You're also not going to look and be like, oh, well, it landed black 5 times in a row. It must be red now, right? It's just a game of probability. It does not work that way. The screens they have at the casino are designed to trick you, okay? We know it can land red 100 times in a row. Now, it's not likely. However, it can happen. Now, comment down below. What's your mom's birthday? I'm just kidding. Don't do that, please, because you'll get doxxed. Okay. So what is a trading plan? A trading plan is very simple. If X happens, then you're going to do Y. I don't know how many of you have a programming background or an accounting background for that matter. It's, if the expense comes in, we're putting it to this account. If something happens in the program, then it's going to produce this report. Okay. That is all a trade plan is. For example, if we break the pre-market high, I'm going long. Very simple. Always if, then. If, then. It's not just, if we break the pre-market high, I'm going to short it. It's a trade plan, but you really need to have if, then variables. Okay. What does this do for us? It preps us for the unexpected. Sometimes our setups don't work. Today, I tweeted a bunch of setups and none of them really panned out except one. But it's okay. I have my trade plan in place. It keeps me risk focused. It keeps me from jamming and imagining, a bunch of positions on stocks that just aren't doing what I want them to do. I can't get frustrated about it. It's just the nature of the business. It helps narrow our focus. When we have a trade plan, number one question I get, yo, Ellie, how do you find which stocks to trade? This will narrow our focus. If we're only focused on, let's say, 5 names for the day, that's all I care about. I don't care about all the other 500 stocks in the stock market of what they're doing. I'm keeping my focus. I just want to hit those big daily breakouts and make tons of money. It also holds us accountable. If you track your trade plan, you will be able to, over time, see if your statements are working, right? If X, do Y. If you have a trade plan, it will keep you accountable. It keeps you within your rules. Yo, Ellie, I'm only going to trade when we're out of the chop zone. Okay, then don't trade stuff when it's not in the chop zone. It'll keep you accountable. Emotional control. A lot of times traders will have massive FOMO because they see a stock going all the way to the absolute moon and they're not in it. This will contain your emotional control. However, if the stock that you're in your trade plan is going to the absolute moon, then we'll have a different conversation. But this will keep your emotions in control. Notice, betting on mom's birthday is not a part of our plan, right? Taking trades that are posted on Twitter or in a Twitter space is not part of your plan. It's no different than you texting in the guy or girls group chat, yo, who do you have tonight for the NBA game or the football game? It's no different. You do not have a trading plan. You did not think the thesis through. Therefore, you will be emotional during the trade. Here's an example of a trade plan. If a stock breaks the pre-market highs, then we're going to go long. If the stock breaks the pre-market lows, then I'm going to go short. So we can see we have the pre-market highs here and the pre-market lows. So if a stock, let's say we're just going to write breaks. Okay, this is literally what I write every single morning. Okay, breaks the pre-market high. Then we're just going to write BTO, buy to open some puts, right? So we're just going to buy puts. That's it. So it breaks, looks like this. We're going to buy puts. Very simple. And if I want to write up the other one, pre-market lows, because we're doing puts. Pre-market lows. And if it breaks the pre-market highs, then I'm going to take it long. Very simple. Okay. And this exact stock did what I wanted to do. Broke the pre-market highs. You can see, breaks the pre-market highs right here. Okay. Now, people ask me, yo, Ellie, are you slapping once it breaks the pre-market high? The answer is no, because I don't buy high days, and neither should you. I wait for it. Look, it's ripping. Look, another candle ripping, and you're probably sitting on these two or three candles here. Oh no, I missed the move. It's all over. I'm never going to catch this play again. And what happens? It then immediately dumps on you on this candle here, forms a flag, which is where I enter in this area here, and I sell it for 45%. However, you were crying because you missed the move because you don't think that a stock that's as big as AMD is going to pull back. Here's another trade plan. If a stock breaks the pre-market high or breaks the previous day high, then I will take calls. And what happens? It's exactly what happens. It breaks the pre-market high, you can see, and there you go. 83% just like that. Simple. Keep your trading plan simple so it'll also keep you accountable. Now, if this stock did not break the pre-market high, say the candle only went to like here and just chopped in the zone all day, then I would have prevented myself from getting chopped out, which a lot of you seem to struggle with. Trading plans help protect me from me. My biggest enemy in the stock market is my own fingers. And you're probably wondering, whoa, pause? No, the reason why it's my own fingers is because my fingers press the buttons. My brain wants to trick me as, yo, Ellie, there's another play out there. I promise you, just sit there all day, you'll catch it. And what happens? You sit there and piss away all of your money. System over profits, degen mind stops. What does this mean by that? If you systemize, okay, you will make money. You also need to turn off your degen mind. Okay, your degen mind, it's like a little voice in your head. It's like, ooh, Ellie, just take one more trade, man. You can do it. And then boom, now you went from green to red on the day and you're pissed, right? Don't let that happen. System over profits. What is a system? All the time, we used to talk about like early 2019, 2021, and 2020. Number one question you would ask a new trader was, what's your edge? And if a trader couldn't tell you what their edge was, then they were deemed to be a fraud. That was the thing before, a lot of the new traders that now trade were on the block. But that's what we used to say to traders. Yo, what's your edge? Right? And a lot of people who've been trading since 2019 all have very similar edges. It's really just following the trend because that's what 99% of people do. So what does the system do? It tells us when to enter. It gives us strict criteria of when to enter a trade. It also tells us when to exit. When do I get out? Where's my stop loss? When do I know the trade is going against me? The system will tell us that. It's not, oh, I took a trade on Twitter. Did this guy stop out yet? Like, no, okay? That's not what we're doing here. We're here for the long run, and we're going to be trading for 20, 30 years, not get rich in 6 months to just lose it all. It also tells us when's a good time to get out and when the probability is in our favor. Think back to our casino table. When the probability is in our favor, that's when we start hammering. But if the probability is not in our favor, aka trading chop, then we know that we should not be placing a trade. It will answer all of the questions you have about your own trade. That is why you need a system. So Ellie, what system do you use? Well, you answered your own question, because when you say the word Ellie, you should be thinking LE, aka levels first, and then EMAs. Remember, levels are always first and then the EMAs. If you don't break a level, EMAs mean absolutely nothing. So to answer your question is I used the LE model. So how does the LE model actually work? First, we look for a retest of a level, okay? Whether it's a pre-market highs, previous day highs, or some key level on our chart. We enter off the retest if we spot it. The problem with a lot of these retest strategies that I see is that a lot of traders seem to miss it, right? They don't have that conviction rate on that spot. They don't have it. So what happens is they miss that, 2-3 minute retest, and what happens, the stock goes on without them and they do not know where to enter next. They get super confused, but people don't realize that on a big breakout trending stock, there's multiple areas of entry. It's not just that one retest spot. And this is what I struggled with when I was a new trader. It's like, okay, well, I understand it breaks the previous day high. I'm gonna wait for a retest, but what happens if I don't get that level of retest? And that is where I come in and where the LE system will really help you. Next, we use the 8 EMA, okay? So this is the purple line you see me post on my charts. Since real breakouts don't have that many retests, we have to rely on the EMAs. When you're trading at all-time highs, can you play the retest of an all-time high? It's like, okay, if we're at $1,000 and the stock comes down to 99, wasn't 99 a previous all-time high? And so was 998 and 997. So it gets really confusing. So we have to use the EMAs. Why do we use EMAs? So EMAs, okay, are formed off of the candles. They're formed off of candles. So they can also act as a support and resistance. Cough, cough. You should really write that down. I'm not going to go into too much detail about that, maybe another time, but it gets really saucy if I go any further from that. This will help us make money, even if we miss the first entry, okay? It's dynamic and it allows for more money. It gives you more areas to enter on a trending stock. Remember, we make money off a trending stock, so you don't want to pigeonhole yourself with just one entry criteria. You want to be able to have multiple entries and milk things all day. A lot of times, a stock will make a huge breakout, right? Huge breakout. And it retests right here, and people sell it for like 10%. And if they held their contracts, they won 1,000%. So they do not have a sort of fallback system to give themselves more entry and rolling and things like that. So you really need to use the LE model along with ADMA on a 10-minute time frame, and this will change a lot of things for you. So here we go. We have a stock. Remember, step one is our trade plan. What is our trade plan? If it breaks below the previous day low, then it's going to be bearish, but it broke that pre-market, so that's really not that relevant. Our next thesis is if it breaks the pre-market low, then we're going to buy puts. And look, right off the open, this stock breaks the pre-market low. Now we know LE. So what are we going to look for first? We're going to look for a retest of the pre-market low. That's the first thing we're going to look for. Okay, next candle forms. We're looking for a retest of the pre-market low. LE model, levels first, and then EMAs. Okay, well, here's the next candle. It still did not come up and test the pre-market low, so therefore there is no entry. And look what happens. As soon as we tap the EMA, we break it down to low a day. So if you were a retest trader, okay, you're hyper-focused on this level up here. You're hyper-focused up here, and you just don't get it. But once that EMA crosses down below the pre-market low, then the EMA comes into play. Why? LE, levels first, and then EMA, AK, whichever is first. Whichever is first is going to be your entry criteria. So in this example, you would enter right off this tap to the EMA. Your stop loss would be a little bit above it, and congratulations, you just made 75% in a little bit less than an hour. This is a simple and easy, repeatable strategy. This is why I love the LE model. Who is the LE model perfect for? I alluded to this before, but when I was a new trader, I really struggled with, how is this strategy going to help me? Based on my unique situation that no one else in the world has, blah, blah, blah. I've heard it all before, okay? So the LE model is perfect for people who miss trades or get upset they didn't get the perfect entry. So if you're, a lot of people trade the retest. So if you didn't get a retest and Tesla's, breaking 500 and going to the stratosphere, you really need to use the LE model. I'm telling you, it'll prevent that frustration. You won't be trying to force things that just aren't there. And what happens is when you get really upset because you miss an entry, it will affect your next trade. And that trade goes bad, it'll affect the next one. And then just kind of snowballs out of control. So remember, levels first and then EMAs. Whatever is first. People who like to buy and hold. Example, if you work an office job, okay, and you can only trade for like an hour or two, and then you got to go back to work, you can just set a stop loss based off this strategy and you can buy stock, sell some at the high day, and let the rest cook. I have tons of students who have tagged me on Twitter over the years, 200, 300, 400 percenters, all while working a job, just because they followed the LE system. People who want to make 100%, not 10%. Granted, I love the scalp. I scalp off the open, right? 10, 20% all the time. But what I'm really known for is those really big home run trades. Why? Because I just wait for the perfect setup, okay? And when I hit it with big size and I let my runners work. And lastly, people who just want simple. I have heard at this rate in my career, so many different strategies over the years, right? So many different people have come to me and I have things I've never even heard of before, but they all really come down to one point, is they're not simple. If you cannot explain to me your strategy in 2 minutes or less, to be honest with you, I'm not listening. And that's why the LE model is perfect for people who just want simple. So summary, just remember, degen plays will fail, but math is your holy grail. Always think back to the game of probability. If you're hitting a losing streak right now and you're really in the trenches, just know following the system and being systematic about your approach, you will be green in the end. I know it sucks right now. Trust me, I've felt that pain before like you've never believed before. Trust me, okay? I'm not gonna go into details, but trust me, I've been there. Just know math is on your side. It's just a game of probability. All you have to do is slowly tweak up your win rate, really focus on those big picture setups, and you will be just fine. Follow your plan. Don't degen again, okay? We're not betting on our mom's birthday here or some random picks we saw on Twitter. We really want to follow our trading plan. And here's the thing. If you're not confident in your trading plan, it takes practice. When you wake up in the morning, just write down 3 stocks and what you're going to do. If then do this. And just see if you're right, because it will build confidence. If you constantly say, oh, I'm watching Tesla over this level, every time it breaks this level, it bounces, I take calls, and you see it work 3 days in a row, you're going to build confidence within your trading plan. And lastly, system over profits, okay? The degen mind stops or shuts off. As a self-confessed degen, okay, I need to have a system in place. Otherwise, I'd be putting 6 figures in penny stocks and trying to short them back down to zero. So I can't do that. I have to follow the system. The system is why you're watching this video. The system is why you like to watch my trade reviews. The system is everything to me. And at the end of the day, I trust my system more than I trust my own brain, because I am a degen at heart. I know my tendencies. I love gambling. I love being dumb. All of those things I absolutely adore. However, when it comes to stocks, this is serious business, and I'm not here just to piss my money away. I'm here to make money and feed my family. And if that's what you want to do, then all you got to do is system over profits. I hope you enjoyed this video. Go and fix your mindset, and I'll see you in August. We're running it up. Peace.